Welcome, welcome. Godric here, your stock market mentor. Better late than never. It's Tuesday, September 17th, almost 18th, 11:24 p.m. Pacific time, September 17th, 2024. Thank you guys for joining me. Appreciate you. Tim Delgado, what's up, man? Long time. Welcome, Knucklehead. Welcome. Appreciate you. You guys, as you're coming here, give me some likes. Let's get these likes up. Let's get 10,000 likes, shall we? I'm here probably a couple times a week. So take care of your stocks. I got your back. Your stock market mentor here, Godric. And I'm going to give you a few ideas today, a few trades. The important thing tomorrow, Alfredo, welcome. Big City, welcome. Ivan, welcome. Tomorrow we have the Fed rate cut. The Fed rate cut. It's going to happen at 2 p.m. Eastern, so that's 11 p.m. Pacific time. So once that happens, we have 2 more hours to trade, okay? So my feeling is they're going to cut either a quarter or a half, probably a half. And in the morning, the market's going to come up. It's going to start building gradually. And once the rate cut happens, we're going to bounce higher, and then it's going to sell off. That's just my feeling. If you look at it like a September month, kind of a weak month, you got to trade. You got to take your wins, take some small gains, and walk away. That's what I think. So anybody trading, it's not going to just go up bonkers from here like you want. I do think we'll probably be higher by Christmas after the election and New Year's, but it's going to be a roller coaster ride. So be ready for that. A lot of trading, a lot of selling. So don't get your hopes up too much. If you're getting dividends, great. If you're getting cover call income, great. That's where we want to be, actually. Talk about that today. Welcome, guys. Appreciate you. AJ-ish, Apple user, welcome. Marlo. Let's get these likes. So tap that screen for me. Tap that screen like crazy. Like you hit it and it has like a bar, like a video game. And then like the nut pops and then the whole thing goes poof, like that. That's what I want to see. Thank you. Also, if you can give me 2 shares each. Give me 2 shares. You help get some people in here and we'll be doing much better. Welcome, Zberto. Mark, Simus, welcome. Daniel. Haddad, welcome. Appreciate you. Okay, so the rate cut is happening tomorrow, I guess afternoon. And we're going to probably have a positive morning. So I would look to close some of your profits. Why? Because after the cut, let's say by the end of the day or the next day, we may be able to buy stuff back lower. That's just my take. I could be wrong. Could be wrong. I mean, I'm probably more right than I'm wrong, but the point is these little dips are buying opportunities, and then these peaks, these mountains, when it surges up, they're just a chance to sell. I'm going to review some stocks I think are good tonight. I'm going to give you my core 10 stocks list. Well, actually, I have 1, 2, 3, 4, 5, 6, 7. I have 9 here right now. I'll give you those if you want to write these down in your journal. Hit those likes for me, guys. Just hit the screen, tap the screen, give me some likes. Appreciate you. First one, Netflix. Now, Netflix is important because Netflix is the king of stream, NFLX. And it just hit 706 today. I think that's the all-time high, or right around that. 706 a share, at plus 10, volume at 2.295 million. The reason that's important is because they have a really simple business, streaming, right to your living room, and subscriptions are like either $10 or $20 depending on what kind of plan you have, $21. But they replaced Disney as the #1 entertainment company. So that's something, and it's like out with the old, in with the new. You know, how many decades Disney's been, you know, entertaining us, you know, theme parks, movies, and just a new kid on the block come around to knock it off the block, you know. And of course, Disney's trying to stream now, you know, but they're just so far behind Netflix. Um, Netflix even cut like 700,000 subscriptions in Russia for that political move because they didn't believe, I mean, like against, you know, Putin. And it didn't really affect the stock that much. So that's the kind of thing, like, when that war ends, we like to just get all those accounts back. Stock goes even higher. So that's what I think is great, even though it's very expensive. And by the way, an expensive stock is a better stock. Okay, I know that sounds kind of strange, but I think they're better because these high-priced stocks, you know, $200, $300, $400 a share, they've gone up and up and up and up, and they've proven themselves, and they made money for investors. Investors are happy, and and the stock price is higher, so it's better because it performed and made investors money. It's better than a $10 stock, which didn't go anywhere if it's $10, or a $20 stock, or even a $50 stock, which is lower, much lower. And so you know, Netflix had I'm going to say was it a 7-for-1 stock split or a 4-for-1 stock split? Years back. So that stock would be even higher, counting all the stock splits, much higher, like 2, 3, 4, 5,000. So these stocks that are having stock splits, that's another criteria, which is a great green light on a stock. They have stock splits because that means that the price is going up and up, and they're splitting the price lower, and that attracts more investors because the price is lower. The value doesn't increase at that point in one day, but the value is that the price comes lower, and that attracts more investors, and what the price tends to go right back up to the old price. So double, quadruple, quintuple, just exponential share growth over time. So when you look at picking stocks, it's a great to use. I use StockSplitHistory.com. Write that down. I'm going to pull it up right now. StockSplitHistory.com. And the value of this easy website is you just put in your stock symbol. I'll put Netflix in here. And if it's had splits, it's a green light. It's a go. Netflix has had 2 splits, one in 2004 and one in 2015. 2004 was a 2-for-1. 2015 was a 7-for-1. So if you do the 2-for-1, 7-for-1, that's 14 for 1. That means multiply the share price times 14. So here, let me do the calculator for you. Do the math. I love math, right, by the way. Calculator. So he multiply 706 times 14. The share price would have been 9,884. Okay, without the splits. So I think Netflix started around $50 a share. So it just gives an example of stock splits, exponential. Oh, thanks for the likes. Give me some more likes. Hit that screen. It shows an example of Netflix stock splits, exponential share growth, going from, you know, let's say $50 to $10,000 a share over time, and then the stock splits are like a mechanic that helps that happen. I mean, if you look at like let's take it like a classic, right? Like Wallmart, WMT. Walmart has had 10 stock splits. Can you imagine? All the way from 75, 80, 82, 83, 85, 87, 90, 93, 99, 2024. 2-for-1, 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 3-for-1 recently. So this stock price would have been also huge. Let me dog into my... How you guys doing? Dr. Care, Stock Market Mentor. Give me some more likes, guys. And give me some shares. On the corner, you got share button. 2 shares each. Appreciate you. Help me get some people in here. And hit hit the screen for me. Get those likes up. I'm going to talk about stocks tonight, talk about some trades, and I'm going to answer your questions. About the market, about trading. I can do that. Leave it to me. Evan, welcome. Threads of Wisdom, welcome. Appreciate you. Electra, welcome. Justin, hit those likes for me. Give me some shares, guys. I will start answering questions. I'm going to go into these stocks I think are good, and then we'll look at some trades and possibly have a strategy for tomorrow for the Fed rate cut. I come in usually Mondays or Tuesdays every week, and then another random day that I think is a good day to check out some trades. So just follow me if you like. I got a couple of goals up there. Throw me a crane if you want. If you do gifts, throw me a crane if you like. And if you want to sub, it's only like $5 a month, and I'll let you guys come up if you sub, answer all your questions, give you my feedback. I can also evaluate your stock for you. I give your stock put up to the 11 criteria for stock selection, and don't be upset if I tell you it's trash. Okay, I'm gonna just warn you ahead of time. I have a strict criteria for stock selection. I was going to look at Wallmart. WMT had 10 stock splits, right? So long-term success, right? 5 years ago, okay, the stock is 78.70 today. Okay. Actually, it was 78.60, down 1.96, and then 10 cents higher after hours. But if you look at the 5-year chart, okay, 5 years ago, Walmart was $39, and now it's $78. So doubled, okay. And what? Also, there's dividends. Every 3 months there's dividends. So if you include the stock doubled plus dividends, it's a pretty decent return. This stock is more of a massive, fat, too big to fail stock. So it's not going to have the kind of robust growth another company maybe NVDA will have, which has went 4 times, 400% return in the last 5 years. But it's still going up, and it's still doing great. And I know they have a lot to sell. Walmart does I know they have 2 million employees, so there's definitely business happening there. Walmart engages in the operation of retail, wholesale, other units, and e-commerce worldwide. The company operates through 3 segments: Walmart US, Walmart International, and Sam's Club. So they own Sam's Club. Sam's Club is like a Costco. They operate supercenters, supermarkets, hypermarkets, warehouse clubs. Okay, so similar to this chart behind me, this Apple chart, Walmart has a similar chart. It's just kind of going up over time. So I want to tell you, there's trends in stocks. They're not actually random. Stock charts aren't actually random when you start studying them. They go up because the investors like the company, and they're making good profits, and the investors buy more shares, the price goes up, and then everybody makes money. PE is one of the criteria I like. PE on Walmart is 41.91, which is kind of high actually. Fair PE is around 20 or 18, but it just means that they're hot and they're highly priced because people are betting on future earnings. Okay. Another criteria is volume per day. You want your stocks to have 2 million volume per day or more. Walmart had 21 million today. That's above average. So way, way, way beyond. So it has in this case has a 5-year chart going up like behind me. Has the PE, which means it's making money. Any PE, let's look at the PE. If it's 10 or more, it's good. 10, 20, 30, 40, 50. It shows profits. If the PE is a dash or a negative, they're losing money. That's a red flag. And most of these companies, if you follow them, their PE is consistent. Like they'll have a PE, it'll kind of stay around. If the company is good, it'll stay around the same kind of number. It won't vary so much. If you have a company where negative PE, positive PE, negative PE, positive PE, that's a red flag because they can't maintain a PE, right? So, volume 1, 10-year chart 2, PE 3. Those are the 3 basic components that give you the green lights for a good stock and make it a candidate for investing. There's a lot more, but that's just the top 3. Do you think Walmart will go back up? Well, Walmart, my friend, is at an all-time high. So what do you mean going back up? Let me look at the 6-month chart. Yeah, it's at an all-time high, man. It hasn't been this high. It has gone back up. Do I think it'll continue up? Yes. Yes, I do. I think Amazon, though it's doing great, it's kind of hitting like a plateau. And Amazon kind of like put Walmart in its place. Like, you know how I said Netflix bumped out Disney for number one entertainment company? Amazon bumped out Walmart for number 1, I guess, merchandise warehouse company. But Walmart's kind of coming back, you know? And Amazon kind of, I think, is plateauing a little bit. That's what it seems to me. If you look at the market cap, Walmart, market cap is important. You want over 50 billion. Walmart is showing me here, market cap 648 billion. So probably this will, I mean, I don't want to make claims, but it'll probably hit $1 trillion market cap, let's say, within the next few years. And that would be great. And that would mean they join the trillionaire companies. Buffett, who's 94 years old right now, his company, Berkshire, just broke the $1 trillion threshold. So here's a $1 trillion company, Berkshire Hathaway, $1 trillion market cap. So once you break that, that's success. Let me see. Any more questions? I'm going to answer some questions. I'm going to just go on with these stocks, and I'm going to give you some trades. By the way, when the stock hits an all-time high, like Walmart, it is a green light, because the theory of buying a stock when it hits all-time high, that they're going to keep hitting all-time highs, keep going. So you're going to just kind of like follow the trend. Sounds kind of counterintuitive, but if you look at these stocks that are performing the best, Palantir. I'll talk about Palantir in a little bit. I got your back on Palantir. Just hang on a second. But like for Walmart, it's a buy signal when it hits an all-time high, because those stocks tend to go higher and higher and make more all-time highs. Matter of fact, that's one of the criteria. All-time high. Let's just write it down, okay? Number 1, volume, 2 million a day or more. Number 2, 5-year chart, 10-year chart. Is it going up nicely or maintaining? Number 3, PE. Number 4, what we say, stock splits. Does it have stock splits? If it has at least one stock split, it gets the green light. And then number 5, we just talked about it, all-time high. Is it at an all-time high? Did it just break an all-time high? That's a green light, number 5. Number 6 would be dividends. Does it have dividends? That's a green light. Number 7 would be cover calls. I'm going to talk about that more. The cover call needs to be 3 to 5% per month. That means if you buy the stock at the market, you write the higher price cover call for the next month, let's say 30 or 35 days out, 40 days out. And if you can get the premium to get around between 3 and 5% for the higher strike, that's a green light. I'll go into that more in detail. So that's 7 criteria. Volume, 10-year chart, 5-year chart, PE, all-time high, dividends, covered calls, and stock splits. Write it down. I'll get to Palantir in a little bit. I have that stock here. I was talking about Netflix. So Netflix also, let me pull it up. All-time high. This one's a little more expensive. 707 after hours. 706 during regular hours. 5 years ago, I have it at 289. So like more than double. And it did have a low point after the COVID. We basically had a correction after the COVID, and most companies already came back from that. Netflix provides entertainment services. It offers TV series, documentaries, feature films, and games across various genres, and languages. The company also provides members the ability to receive streaming content through a host of internet-centered devices, including TVs, digital video players, TV set-up boxes, and mobile devices. It has and operates in approximately 190 countries. Like some of these stocks I want you guys to check out have 150 countries where they sell their service or product. You know, Coca-Cola is like everywhere, right? So that's the kind of company I want you guys to consider, not just some hole-in-the-wall mom-and-pop shop that has a new idea. You can't invest in that because that's not proven. I want you guys to try the tried and true stocks, the ones that have performed, that shown performance over time, that have real employees, 100,000 employees, that provide a real product, real service. Not some new flavor of the month idea, which is not proven. Guys, hit that screen for me. Give me some likes. Appreciate you. You guys in here, give me 2 shares each. Appreciate you. Okay, let me look at your questions. If you guys want to throw me a sub, it's only $5. I'll bring you up and I can answer your questions. It's absolutely insane. I was just talking about thoughts on Coca-Cola. I was just talking about the last live how the stock market is the new frontier for finance. Like if you look at the real estate investors back in the 60s and 70s, who did great, by the way, renting apartments and renting houses and stuff. That frontier has been replaced by stocks. Because why? Because we look at the top billionaires of the world, Elon Musk, $200 billion. Jeff Bezos, $200 billion. Bill Gates, $140 billion. Warren Buffett, et cetera, et cetera. They're all in stocks. And, you got to go way down the trough to find a real estate investor on the top billionaire list. So this is it, guys. This is where the money is. It's like a digital currency. It's just like you open your account, put some money there, start buying some stocks. Ideally, buy great stocks. And they go up over time. You make more money, deposit more money. Hopefully your stock has a stock split. You get double your shares. The price comes down. And then what? Ideally, hopefully, it'll go back up to the same price it was before. Then you double your money. Exponential growth over time. Right? You get dividends every quarter. Every quarter is every 3 months. 3, 6, 9, 12. 4 dividends a year. That's good. I mean, it's not a lot of money. But if you look at like some of these dividend stocks, Wallmart is a dividend stock, matter of fact. WMT. So that gets the dividend check mark. And the dividend for Walmart is, it's only 1%, 1.03%. But hey, 1% is better than nothing, right? So it's better than it's better to have a dividend than nothing. That's how I look at it. Not every stock has a dividend, and then there's stocks that should not have a dividend, and that's fine because they're like long-term share growth stocks. But the ones that have a dividend, you gotta give them some respect. Okay, so we talked about Walmart. We talked about Netflix. Someone wants to know about Coke. In Thai, Berkshire shares are worth so much. Thai, back in the, I want to say 1998, when I had a job, Berkshire Hathaway was $58,000 a share, and that was like all the money in the world. Like if you could buy one Berkshire share, you were like a king. And now they're Berkshire Hathaway. I think there's like 700,000. BRK.A. BRK/A. 685,000 a share. Now, you know I talk about stock splits. Warren Buffett doesn't want to have any stock splits, so don't expect this stock to split. Okay, this stock could have split so many times if he wanted to, but he just wants to. He wants to be like that. He's like the king. 5 years ago, it was 300,000. Now it's 600. More than double 5 years ago. This is what I'm talking about. Like you look at this chart. Like if, see if I can find. Can I do? There's a lot of companies with a similar chart to Berkshire, to Apple, to Walmart. Here's AMD. This AMD 10-year. Like, has a little correction there. That correction there is the COVID. Okay, and it comes right back up to higher. Okay. Here is Chipotle, CMG. Few bumps and dips, but like you can't really lose money long term in this. I'll tell you about that one a little more later. The QQQ. Now, the QQQ is interesting because it's an ETF, which is like a mutual fund stock. It represents the top 100. This top 100 technology. Well, it represents the top 100 NASDAQ stocks, mostly technology. And these stocks are like Netflix, Apple, the top. And it's doing great. The idea is that you have like a diversification because there's 100 stocks in there if you buy this. And they only charge like 0.5%, 0.5% or 1% commission, so you don't really notice the charge on that. They don't give you the full return, but close enough. And being the Qs, the triple Qs, Invesco, QQQ Trust, you're in the top brass of the NASDAQ, which is like 4,000 stocks in NASDAQ. So that's a big help. It's not actually as good as, if you were just in Apple or NVDA or AMD or Netflix, but it's pretty damn good. It's great for people who don't know what they're doing, honestly. Like if you're not trading, you're not like watching the market every day, pick up some Q shares. You'll see they'll go up over time. Now, think about the Qs, which also happens with the Dow Jones and the SPYs, S&P 500, is they kind of cheat. What they do, every couple of years, they'll knock out a few of the weak, non-performing companies, and they'll put in their new kid on the block performing companies. They vet their stocks every so often, every couple of years. So what they're doing, they're taking these, let's say, top 100 for the Qs, and they're always changing them to what the better stock is. So in essence, it's cheating. Like if you grabbed onto one stock and just held it for life, if that stock didn't perform that well, if it turned a new leaf, whatever, or didn't do well, went down, that stock will be removed from the triple Qs. It'll be removed from the S&P 500. You see, so they're always vetting. So you always have to keep up with it, and that also teaches us to vet our own portfolio. If we have a stock that we have for years that's not doing nothing, maybe we fell in love with it. Maybe, for some reason we still have it. We think maybe it'll come back. Meanwhile, you have like NVDA is just shooting up like crazy. Walmart's going up. Netflix going up. Palantir's going up. The Qs are going up, and your stock is just sitting there doing nothing. Gotta make that tough decision. You gotta just get rid of it, take a loss, walk away. Lick your wounds and choose better, pick better. And we will pick some stocks that are going to go down. We will pick some stocks that are going to lag. And that's all part of experience. It's all part of learning to do better, to pick better. I give you 7 criteria right here. I mean, there's other criteria. You may not like my criteria, but I have reasons for what I do. And the idea is that you're going to try to beat the market. You're going to try to have a stellar investments. You will have some losses, but you have to take the the bull by the horns. You have to fight. Like in a boxing ring. And try to do better. Dump your losers, pick better. Ideally, you keep your winners. Like that. So the Qs are a good example of something you can pick up a few shares, $400 a share, right? You can also get the option. There's a Q option, like here, the Qs, right? The Qs are kind of expensive, right? So, let's look at the option. Q. All right, look, so it's September, okay? So always go out at least 2 months. Don't buy options for next week. That's bad gambling. Click on options, click on strikes, put all. Expiration, put all. And you're going to go November monthly. That's 2 months out. Is going to be November 15th, which is 58 days, 2 months. Okay, so at the money, which is $4.76, $4.74, the option is going to cost you $4.75 is $17. Kind of expensive. $1,700, right? But to buy this call for $1,700 is much cheaper than paying $40,000, which would have cost you about 100 shares of the QQQs. So you can spend 47 grand and buy 100 QQQs and have 100 shares, or you buy a call option for $1,750. And control 100 shares. In theory, you're controlling 100 shares of stock with this one call option, right? However, if you bought that option today, tomorrow, and then come 2 months and the stock has dropped in price, your $1,700 option will be zero, and you'll get nothing back. That's how it works. So, like, if you want to talk about the people that lost all their money in the market, most of them lost their money in call options because buying too many call options, the options go to zero, they lose all their money. What this trade is about is you buy this call, $4.75 for $1,750, and you have 2 months to trade it. That's how it works, okay? Wait till it's like tomorrow. I'm just going to say, I'm just going to swing up a little bit, on the heels of this Fed cut. The $1,700 option, which is 17.53. You multiply it by 100. 17.53 times 100 is 1,700. It'll probably go to $18 or $19 tomorrow. And this is the whole point of trading, guys. Like, this happens all day, every day. When your option moves, if it moves in the money, gives you a profit. If you buy it at $17.50, it goes to $19. That's $150. What am I going to tell you? Pull the trigger. That's how you trade. Don't try to be greedy. Don't try to double your money. You can also invest half that. Spend $800 and buy the $4.95 call. Buy the 500 costs you $635, and that just means that you're buying a higher strike, which is like more fluff, like it's out of the money. You get great leverage on these options because if the market does go up tomorrow, you have this call, the $6 call may go to $7 or $8. You see, and then what? Pull the trigger, sell it, take the profit, walk away. You can even go like $200. You can buy the 520 strike for $200. Technically, you're controlling 100 shares of stock. What I say, call options are options are how you control your stock with less money, more risk reward. Okay. Now, investing $200 in the 520 strike is risky because if you just held this call option for 2 months and the SPYs did not go to 520, probably won't go to 520, that option you have is going to go to zero. You get nothing back. If at least you buy the shares, even if the shares go down, you still have money left in the shares. You have something. But with these call options, if the stock goes the wrong way, poof, get crushed. But again, tomorrow, let's say we have a little bit of beefing up in the morning, shares go up on these Qs, you have a $2 option, it says 214 actually. It could go to 250, 275. You'll have actually a better leverage on these smaller options higher up, but more risk because they're so high, they're so out of the money. And if they don't move, you only have, 58 days. And if they don't move considerably within that time, your option will dwindle down towards and eventually zero. That's the risk. And the deeper the money you buy, like you can buy a 400 call, right? That's going to cost you $78, right? But now your option, which is 7,800, which is still less than 47,000, which is what it will cost you about 100 shares of the QQQs. You can buy a strike 400 for $7,800, way in the money. This one's going to have more value because come November, the expiration, if the shares just stay the same price, you're going to have 78 points of value. So it's like you're buying, you're paying more money for its safety. That's what it is. The lower you go. Make sense? The keys are a good leverage. So this here is that COVID dip right there. See, it just came right back after. Questions. Thank you guys, appreciate you. Hit the screen, give me some likes, guys. Get this TikTok app. When you hit the screen, that's respect. That means you like me. And it helps get more, it's the algorithm, I don't know, it helps get more people in here. And if you hit 2 shares, give me 2 shares, just share, and that also gets more people in here. Questions. I usually go for an hour or so, hour and 15, twice a week. Want to throw me a sub, that's cool. I let subs come up and ask questions. Brandon, welcome. Bro, welcome. Abdullah, Mauricio, thoughts on Tesla? Mark. I have a lot of thoughts on Tesla. Elon's going to reveal his robo-army next month. NVDA, you guys asking Tesla, start at NVIDIA. Tesla, I think, is going to do great. I think Tesla's going to be going up. It's going to break that old recent high of 265. Probably going to go towards 300. Let's say by January 1st. I think we're going to get a boost next month on the robo army, but Tesla is a roller coaster. It's up down, up down. But because it's the main game in EV, and because they're making profits now more steady, I think we're okay. I think you're gonna make money over time. Ideally, you're writing covered calls on Tesla because the covered calls paying like 7%, 5, between 5 and 7%. Let me look up Tesla. Tesla is $227 a share. The 5-year chart, I'm showing you these technicals. I'm showing you these criteria. The 5-year chart shows 5 years ago it was $15, $20, and now it's $200. So it went up 10 times. Okay. word. Volume. 66 million. 66.8 million in one day. That is tremendously great volume. See, volume is important. Why? Because more investors, more traders are in the stock. And when the stock dips, they're going to come in and swoop and buy that lower price. That's going to bring the price right back up. That's going to save your investment. That's why volume is 100% better than no volume. Yeah, no volume stock dumps. Nobody cares. Be stuck in that stock for a year trying to get money out of stock. Waste your time and your money. All right, Tesla designs, develops, manufactures, leases, and sells electric vehicles and energy generation and storage systems in the United States. Storage systems. China and internationally, the company operates two segments, automotive and energy generation and storage. The automotive segment offers electric vehicles as well as sells automotive with regulatory credits and non-warranty after-sales vehicle, used vehicles, body shop and parts. They have a parts, supercharging, retail merchandise, etc. The PE on Tesla, I know it has a PE, 63. A little bit high, but it just means it's hot. Market cap, 727 billion. I think it broke the $1 trillion, and then it came down, which is fine. It's it's a trading stock. Stock splits. Should we do that? Want to know Tesla stock splits? Tesla. I know it has stock splits because it just had a 4-for-1. Tesla has had 2 stock splits, a 3-for-1 and a 5-for-1. Okay, my bad. So it's like 8. So the stock is actually 8 times the price it really is. Is that right? I did all right. Questions in the video tomorrow. Let me pull the video. Tesla, let me pull the video. Yeah, 115.59 down 119. Now, we had a choppy day today. Ahead of the Fed cut meeting tomorrow. It's going to be at 11 o'clock Pacific time, 2 o'clock Eastern. So we'll get 2 hours of trading after the cut, okay? That's where you want to make your trade. I think you're going to probably want to sell. Because it tends to, I just think it'll sell off. I just think it will. But I'm not always right. Today, it started up, went down, and it kind of just did that, stayed there. Look at the last 5 days in NVDA, it's kind of sloping down. NVIDIA was a 108 back in September 11th. So last week, it went up to about 120 and then kind of sliding off. Honestly, I think NVIDIA is going to be down another point tomorrow. But here's how you can trade it. In the morning, it'll creep up. Right before the Fed cut, after the Fed cut, it'll bounce up a little bit, and that's when you want to sell. Honestly, I think you can buy back lower end of the day or tomorrow or next week. That's what I think. That's the trade I think. So like 116, 117, 118, 119 in the morning, 120 maybe. Probably a high. Then it'll sell off. I think. Long term, it's going to go up like Tesla. It'll be. NVIDIA is gold right now. They have the chips, they have the AI, everything's going great with it. The PE on NVIDIA is, this was we're doing criteria, is 54, which is great for them, highly priced. Market cap 3 trillion. Hello. I just bumped right into Apple right there. The 3 trillion. Apple and Microsoft right there. And NVIDIA has more of a ability to grow. Unlike Microsoft, unlike Apple, okay. They have a good CEO too. He's kind of smart, I think. Smart. Volume. This is like the biggest volume right now. Volume on NVIDIA, 231 million. And that's actually below average, so there you go. Hello. So this one's pretty safe. Now, let's look at the cover call. Oh, I'm going to do the cover call, the video, and also Tesla. Watch this. I'm going to show you something. Click on options. Click on strikes. Hit all. Expiration all. Go next month. Strikes. Hit all. Expiration all. Go next month. Strikes. Hit all. Expiration all. Go next month. Mr. Sajad. Not taking people right now. Did you sub? Let me know if you sub. I'm doing a cover call right now for the video. So buy the shares here. 115. That's $11,000 for 100 shares. I'm just going to give you the sweet spot. Go next month. October, which is going to be October the 18th. That's 30 days, right? Every day, every month you write the cover call. September you write October, October you write November, November you write December, okay? And here 115 is showing me 710. You want to allow share growth. 120 is 480. I would do the 119 for 520. That's what I would do, because it allows you to have, 4 points, 350 in share growth, and then you also get premium. The premium in this case, if you sell the 119, so you agree to write, put -119 strike call for next month, October 18th, you're getting 520, okay? That's $520 for 100 shares for one contract. So let's do the math. $520 premium for the cover call, which is what you get in your account, divided by your cost, which is 11,500 100 shares. 4.52% return. NVDA. 4.52% return on the cover call per month. That is excellent. What would $520 do for you? Probably pay for maybe if you have a storage bill, or you have a car note, pay for your gas, pay for your electricity, pay for some Starbucks, some Netflix stream, buy some food. Now, my goal is always to write 10 cover calls a year. So this 4.5% is really 45% return. Because you're going to write at least 10 cover calls, maybe 12, but at least 10. Get a 45% return on the video, which is great. And that's how you retire the stock market. Just get like a nice cover call return, pay your bills. You pay enough bills, retire the stock market. Let me show you how Tesla's a little bit better, okay? Tesla, just a little bit better. This one's 227, so it's going to cost you 22 grand to buy 100 shares. But do not despair. Watch this cover call. Buy it here at 227.52. Write the cover call for next month, October 18th. That's 30 days. And the 230 is paying $16, which is unbelievable. 35, 27, 40. Okay, I would sell right the 240 call, because it's paying you $1,205 or $1,205. It allows 13 points of share growth. You get, well, what the hell? Yeah, 13 points of share growth. You get 13 points of share growth. You get $1,200. That's the sweet spot. Let's do the math. 12.05, which is a premium for the cover call, divided by the cost, 227.5, equals 5.296% return. Tesla, 5.296. Just say 5.3, close enough, which is 53% return for the year for writing 10 cover calls. Hello. Told you it was a little better. Got your back, man. You guys, do you have a master plan? that's brewing, because you have a financial plan, because these cover calls are looking mighty tasty. I know you guys don't want to work after you retire. I know you guys want to be like at McDonald's taking orders at 77. Too many. They're just too many. You need something. You need the niche. Thank you. No name. Not sure what you're talking about, but maybe elaborate. TSML. Appreciate you. I'm taking the questions right now, guys. I appreciate you. Hit the like. Oh, thank you for the likes. Let's get to 1,000. Let's get to 1,000 likes. Come on, hit that screen for me. Let's go. Look, I'm motivated by likes. I'm motivated by cranes. Throw a crane here if you like me. I won't say no. I'm also motivated by subs. Give me a sub. Let you up here. We'll talk business. I can look at your portfolio if you want. Advise on your trades. I can name 10 off top of my head. I can name 10 on top of my head. What's up, Money? I'm sure you can. I'm sure you know what you're doing, man. And maybe I can show you a few things. Maybe you can show me a few things. Appreciate you. Hit some more likes up there, guys. What do you think about Win or Lunar? Take trip. What do you think about Win or Lunar? All right. I don't recognize these companies, so don't hold your breath. But I'm going to give it the criteria. WEN. Wendy's company. Ooh, I like Wendy's. Wendy's hamburgers, the square ones. Yeah. Wendy's Co. $17.77. Not a good share price. Where has that stock gone? Pretty low. Let's look at the 5-year chart, shall we? Wendy's 5 years ago was $21. Now it's $17. Yeah, so it's lost. So look, the share price is down, right? I mean, the share price is low. That's criteria. That's the 8th criteria, by the way. Share price. 8th criteria. Share price should be 100, 200, 400. You see? Check. No share price. No 5-year charts. Losing money over time. Okay, now. Let me read it for you. Wendy's company, together with its subsidiaries, operates as a quick service restaurant company in the United States, internationally. Okay, I like that. It operates through Wendy's International, Wendy's Global, real estate development, operation developing franchise and system of quick service restaurants, specializing in hamburger sandwiches. It owns and leases real estate properties. The company was formerly known as Wendy's Arby's. Oh, they own Arby's. Arby's, I know. I mean, nobody went there. But I digress. And changed its name to Wendy's Company in July 2011. I do love Wendy's, though. Market cap, $3.6 billion. So, doesn't have the market cap. It's too small. Oh, the 9th criteria is market cap. You want a $50 billion market cap. Doesn't have market cap. Doesn't have 5-year chart. Doesn't have the share price. I'm just going to guess it doesn't have a PE, but let me look at the PE. It does have a PE. 18. So it has a fair PE. It gets a PE. It has 1 star. Let's look at dividend. Any dividend? No. No dividend. No dividend. Not that I can see. It's a very small company. I didn't know it was that small. $3.6 billion. That's almost like the price of a house in Beverly Hills. So I can't do it. It doesn't have the criteria. Oh, look at this. Look at the volume. Okay, it has 2.5 million volume. So it has volume. No dividend. It has volume and it has a PE. Let me see if it has a cover call. Cover call options. Strikes. This share price 17 cents was where pound share was last year. Pound share was $17. Check it. Okay, so you buy the shares here at $17, which is $1,700. So you're getting in cheap. Write the cover call for, let's say, 18 for 1 month out, October 18th. Get 45 cents. Not enough. 45 cents. Nah, not enough. Let's do it. Let's do the math. 0.45 the premium you're gonna get for the cover call for selling the 18 strike higher than the share price, divided by the share price investment 17.77 equals 2.5% return. WEN 2.5% return. It's not. It doesn't have the 3% cover call return, so I'm not going to give it the green light. So it just doesn't make it. Doesn't. It's not hot enough. The traders aren't like hot enough on it to get it have a good option, to give it enough option money. Can't do it. Let's go to Lunar. LUNR. Lunar Intuitive Machines. $8. You know, when you show me these companies at $8, $17, you know, it's just a red flag, bro. Because $8 time, where did it go? Like, nobody made money on it. Like, I'm to put the fire chart. Why do I have a peak of $24 in 2023? The chart is flat. The chart's not happening. The volume. Ooh, 26 million. Has volume. What's wrong with this company? Intuitive Machines. Let's take a look. Intuitive Machines Incorporated designs and manufactures and operates space products and services in the United States. Its space systems and space infrastructure enable scientific and human exploration and utilizing the lunar resources to support sustainable human presence on the moon. Was it Gingrich who wanted to do a moon base? I can't. Dude, there's no oxygen on the moon, bro. Come on, man. You can't, you're not serious. Look. It's not my kind of investment. I'm investing in real shit, you know, Disney, you know, Netflix. I'd rather do Wendy's, bro. I'm not even I'd rather do Wendy's. But don't get upset. I just have a criteria. I just know what I need to do. You know. I bet it has a cover call with the 26 million. Let me do the cover call, okay? If you really want to invest in this stock, don't do this. But whoever has this company, Lunar, watch this cover call. I bet it pays a huge cover call. Let's see. So you have 100 shares. You buy at $800 right here, $843, right? Write the next one cover call, which is October 18th, 1 month out. It's $843, so you sell the 9 for 10 cents. 10 by 20. Okay, this is what I want you to do. Write a cover call for 9 for next month, but instead of putting 10 cents, which is big, you're going to put a limit. You're going to put 15 cents because the bid's 10. The ask is 20, which is a big wide spread. You'll probably get 15. Let's see if we can get you some money on this cover call. 0.15, which is 15, divided by the investment of $843 a share equals 1.78%. What did I do wrong? Why is that not working? It doesn't even have a cover call. I can't do it. I can't do it. All right, give me some more questions, guys. They're making me do a puzzle, guys. They're testing me. They think I'm an AI. Godric here, guys, your stock market mentor. We went over some stocks. I went over 9 criteria. I gave you almost all my criteria. You guys wrote down in your notes, in your journal. Wrote that down. We went over, you know, Netflix. Went over Tesla. Went over Wendy's and Lunar and Wallmart. And talked about NVDA. Questions? Appreciate you. You guys hit the likes for me. Get these likes up to 1,000. Come on. Let's explode those likes. Get some people in here. I'm going to probably wrap up in the next 10, 20 minutes. I'll take some more questions. I'll talk about a few more stocks, and I'll just call it a night. Like I said, tomorrow we have a Fed cut at 2 p.m. Eastern, 11 a.m. Pacific. And we're probably going to be up in the morning. And I suggest take small gains and walk away, because what generally happens, after all, the pizzazz, it tends to sell off. That's what I think. You get a bonus, like if you have call options or shares, you sell them in the morning, you can buy them back by end of the day lower, probably. What stocks are you personally invested in? Raymond Campus. What stocks am I personally invested in? I'm going to give you my core 10, okay? I have 9 of them right here right now. The last one is CMG, so. Let me give you some dividends, okay? MO, Altria, dividend, 7.7% dividend. PM, the brother company, dividend, 5% dividend. StarBucks, SBUX, dividend, about 2.5% dividend. 1, 2, that's 3 dividends, okay? Next, Palantir, PLTR, that's a great cover call stock. No dividend, guarantee you. No PE. Actually, they have PE. They have 200 PE. Chipotle is doing well. It's a cover call stock right now, and also a share growth stock. Tesla, TSLA. Oh, the Chipotle is CMG. Tesla, TSLA. Talked about that already. And NVIDIA, NVDA. Great cover call. Great long term in NVIDIA. Same with Tesla. AMD, Advanced Micro Devices. AMD doing great cover call stock. Apple, APL. Cover call, also small dividend, also long-term share growth stock. Netflix, NFLX, long-term, also cover call stock. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Let me give you one more dividend. WHF, Whitehorse Financial, 12% dividend stock. That's a golden nugget. Why the dividend is great? Because the dividend, I just say, you fall out of bed, you get the dividend. You just hold the shares, get the dividend. No trading, no worrying about Fed cuts, no pulling your hair out. Just hold the share, get the dividend. I always say, as long as they don't slash that dividend, you're good. And you get a dividend stock that has consistent history of not slashing the dividend. Altria and Philip Morris, what? Increase their dividend to match inflation, higher and higher. You're getting more and more dividend. You're getting a raise. It's like when you have Philip Morris and Altria, it's like when you're working a job getting a raise because they increase the dividend. And if you have 12% dividend on Whitehorse, and you have a 2.5% on Starbucks, let's do the math, okay? I'm gonna do a dividend portfolio for you right now, okay? You dividend investors. 2.5 for Starbucks, plus 7.7 for Altria, plus hang on, I messed up. 2.5 plus 7.7 equals, and then that's 10.2, and then let's add Whitehorse Financial 12. That's 12. And let's add PM, Philip Morris, which is 5. That's 22. That's 27.2%. 1, 2, 3, 4. Divided by 4. 27.2 total dividend. Divided by 4 stocks. 6.8% return. Okay. Why is that important? Because that's a really high dividend return on these dividend stocks. And if you have $1 million, you're getting $68,000 a year. And that's going to supplement your Social Security and maybe your pension. And you can live off that. And you can buy stuff. You don't have to sell shares. See, look, if you have Microsoft and other stocks that don't have a dividend, really, don't have a big dividend, and you're just getting long-term share growth, that's great. But when you're retiring, you have to sell shares to pay your bills. And if you did that, eventually you would have no shares. So dividends are 100% better because you're getting money, you're getting paid every 3 months. Some dividends every month, but these are every 3 months. So what? You can pay your bills, like $68,000 a year. Most people are going to have that when they retire, $1 million, $2 million, you know. So with a high dividend portfolio, you can just live off that dividend. You don't have to trade. You don't have to sell shares. That's why it's so great. And that's why cover calls are great, because though you are trading, you're getting monthly money on the cover calls, like I showed you. 5.3% on Tesla, 4.52% on NVDA cover call. We went over those. I'm going to post this on TikTok. You can wrap the tape back. Thank you guys for the likes. Appreciate you. So those are my core 10. I'm not in all of them at the same time, but what will happen is, like, I'll see Netflix pop up, sell Netflix, and then Starbucks will dip, get in Starbucks. I'll see Tesla pop up, sell Tesla, and I'll see NVIDIA dip, jump into NVIDIA. So you're constantly betting, you're constantly trading. I'm about to wrap up a little bit, guys. I'll take some questions now. Any more questions? FXI. Lonnie, are you serious? FXI, let's take a look. Don't be upset if I tell you it's trash, okay? Just hang out with it. I'll tell you why, okay? China large cap. Is this a mutual fund? iShares, China large cap. I don't do China. I just don't. There's so much more opportunity in the U.S. But I'll look at it. It's down over 5 years. 5 years ago it was 40. Now it's 26. So there you go. I lost money in 5 years. I wouldn't do it. Let's see if it's showing. Since it's like a mutual fund. I would not buy a mutual fund that went down in 5 years. I just won't do it. Like, just look at NVIDIA, look at Apple, look at Tesla, look at AMD. They're going up. They're going up like crazy, and you can't lose money in 5 years, bro. You can't do it. All right, I understand, like, the theory of, like, investing in something that's losing money, but how much of your hard-earned money can you put in a stock that's going down over time? It just doesn't work out. Disney, in 1 year hold, sell, or sell now. Robert, is Disney a 1 year hold or sell now? I meant 2014, 2016. Bro, I want to say I like Disney. Not that I like the stock. I like the company, because I grew up, you know, on Disneyland, Pirates of the Caribbean, you know, my favorite ride. But man, they got ousted by Netflix. They just, you know, bam, just knocked them off the block. Let me put Disney. Disney will probably be okay, you know. They're not going to lose too much money. Keep you out of trouble, but I don't think they're going to be stellar. 5 years ago, the stock was 150, 148, and now it's 92. So it's down in 5 years. That's a bad red flag. They have the volume, check. They have the 5 year chart, red flag. They have the volume, 8.2 million a day, check. I know they have a PE. 35, check PE. Have a volume. That 10-year chart, no. The market cap, I know they have that. Market cap for Disney is $168 billion. Not bad. But thinking about it, that's not very big for a company that's been around for, what, 70 years? 60 years? They probably had a plateau, you know, for whatever reason. Let's see what it says here. Walt Disney Company operates an entertainment company worldwide. It operates through 3 segments: entertainment, sports, and experiences. The company produces and distributes film and television video streaming content under the ABC television network, Disney, Freedom, FX, Fox. They have Fox? National Geographic and Star brand television channels, as well as ABC television stations and A&E television networks. The television networks are a dying dog. They're all going to be replaced by social media, Twitter, X, Meta, Netflix, the apps that are really hot, Amazon Prime is doing great. I would say cut your losses in Disney if you can get a much better candidate. I would look at Netflix for entertainment. That's what I do. I would switch from Disney to Netflix. That's just because I want the old and with the new. It may come back a little bit, but it's never going to be that stock that it once was. Disney's kind of like Disney to Netflix is like real estate is to the stock market. The frontier has flipped. Back in the 60s, 70s, it was real estate. Now it's the stock. Now the stock market. Now the frontier is in stocks. Back in the day, entertainment was Disney. Now it's Netflix. It's just Netflix is just so sleek and streaming, and they don't have parks. They don't have all these employees to worry about. As fun as Disneyland is to go, and as much money as they make, it's not going to be the leverage that a company like Netflix can do. Without all that legal, without all that, I would flip to Netflix. That's what I would do on Disney. Okay, final questions, guys. I gave you my core 10 stocks. I gave you a bunch of stocks, trades. Talk about some cover calls. Talk about a couple option trades. Tomorrow, I talked about how we're probably going to be up in the morning and up for the cut and then down by tomorrow. I'll be down by the next day. So maybe do some small trades. You can, of course, hold because we'll probably be okay, October, November, December, January, probably fine, I don't want to base it on the election. Election's kind of tricky, but the best stocks are always going to perform no matter who's president, no matter what in economy, That's what I think. And you can always do cover calls. You can always do dividends, regardless. Look, you're getting 3 to 5% of cover calls if you have the right stock. You're getting 6.8% on these dividends I just showed you, average. You stay out of trouble. Final questions, guys. Give me some likes as we get out of here. Give me a couple shares as we get out of here. Appreciate you. Respect you. Want to throw me a sub? I will let subs come up. Talk to them. Answer questions. Look at their portfolio. Advise on trades. Throw me a crane if you appreciate me. I like little gifts. Okay. Appreciate you guys. Any more questions? Good luck tomorrow. I think we'll be okay. Don't worry. I don't think we're going to crash. Visa. Chuck, Visa. You want to know about Visa? Visa's on S&P 500. So it's one of the top stocks. V. Symbol V. 291. Up $1 today. 5 years ago, it was 178, and now it's 291. So basically, not quite double, but up nicely. So it gets a 5-year chart. I know it has volume. I know it has millions of volume. Check. It has a PE. PE is 33. Check. Market cap 576 billion. Oh. This may go to the 1 trillion market cap. Keeps on going. Check. Stock splits. Let's check. Oh, let's check dividends. Dividends. I don't see a dividend. It doesn't need a dividend. Let's look at stock splits. Visa. V. Visa has had 2 stock splits, so it gets the stock splits. So Visa's a go. Visa's a green light. I got a 1 for 5 and a 4 for 1. Visa's a green light. Keep going. Keep a Visa. All right, guys, I appreciate you. Let's call it a night. I'm going to keep it about an hour. If you want to DM me, I'll answer my DMs about stocks, questions. Just one question at a time, please. I'll be back probably later this week, and then probably get on Monday or Tuesday. I'm going to throw me a sub. That's cool. I'll answer your questions for subs. If you want to follow me, I'll follow everybody back after the live. Thank you, guys. Roderick out. I'm gonna appreciate the sub.